Hello guys. Hope everybody is doing good. I'm just testing if the voice is coming or not. Give me a moment. Just testing. Voice is Sounds good. Um Looks like everything looks good. I just wanted to test um something. Okay. So far so good. Okay. So yeah, hope everybody is doing great. Um, we had a session yesterday and we were discussing about how the liquidity is moving and where exactly the market wants to go next. So we discussed and predicted the market was supposed to go from here till here, then the next target was here. So for the people who were um, not here, this was the prediction. As you can see here, this one was the yesterday's prediction. You can check the timestamp here. We predicted the market wants to go and grab this liquidity. Then whoever watched the live, we also predicted that the market wants to take these high liquidity, and I did a kind of an analysis and some like prediction in terms of how the market can pump and collect all these liquidities from here. And that's exactly happened yesterday. Then and it followed the trend today. Then yeah, so simply if you're looking for a system that can help you to get more quality trades and provide better results, then this is something that you can use it as a tool. I built this BiasLogic system so that this can be helpful, and you can, if you're looking for some uh, weekly bias and updates, then you can go and sign up for this weekly bias and community access. Then the system has like all trading tools that is required for a crypto trading. Then it's like 6+ trading features inside it, would give you like a bias of the day, then protect your money with the risk card system. And there's something called the position calculator, where how much money that you should be risking every time. Then there is a trade journal, how you are improving your trading journey and behavior. And there's a performance board and the consistency board. That's something which is crucial in trading, how consistently you become like profitable, kind of a tool. Yeah. So coming back to the live chart, we'll do the proper analysis. We did a kind of a prediction here. Let me just try it. Okay. So we predicted here yesterday that the market wants to take this high. Then that's what exactly happened in terms of the manipulation from the market. And here we predicted that whoever watched the videos, yesterday's videos, then there are consecutive multiple candles, like bearish candles here. So most of the people might have thought like, okay, there is um, like a bearish trend is going to continue, and a lot of people might have entered the trade and put the stop losses here, and the market took that liquidity in one single shot, which what we predicted yesterday. Then yeah, that's what exactly it happened here. Then if you come to, yeah, come here, this was our prediction, and exactly it took that to pending resting liquidity, and you can see that how fast this moment happened. And this was the London session, and this was the New York session, and it pumped it and took everybody out of the game, and finally became like currently in that position to get that enough trade and become like more profitable. Now coming back to the question here, let me just put something here. Give me a moment. Yeah, it's 228. Okay, sounds good. Okay, just let's just connect something. I'll just want to do a rough calculation here. Approximately how much would be the, yeah, I'm seeing a possibility in trading. Like I see a possible short which could at least get like 11x now. That's something that I planned, but not 11x, but that's my first target, and there are multiple targets I'm planned here. So the market more likely can come maximum till here. Um, the possible places are reversal can happen from here, from here, from here, and here. So if you consider this risk reward, if it hit that target which I predicted yesterday, um, as you know that I was out of the game here. Yeah, I did something from here which I mentioned yesterday. Yeah, I tried something like this. Yeah. So if you were able to hold that trade, right, till where I predicted the market, you can see how the risk reward was 26x. Yeah, but it was a nice trade. Even if you out of the game here, still you got a reasonable of 13x risk reward. So if you risk $10, so let me just give you as an example, like if you risk $10, I'll just put it here so that you guys will have an idea what I'm trying to say. So this was long. So this was a trade. Then this was the stop loss. Okay. And now I'll just show you the risk. So this one was, looks like, oh, there's something wrong with the number or what? 60. Oh, I think it didn't copy. My bad. Entry. Yeah, it looks like 13x. So if you had a capital of, yeah, I had a capital of 1100, I can risk maximum 3% of my capital. That's what I did. No, I think I did 2%. That was my planned risk. So yeah, so 2% risk, the gross is $288. And if I was wrong, I'm gonna lose 32. And if I was, of course, this was a win. So I made $278 from that, just from that one single trade. So if I could have used 3% risk reward, then that would have almost doubled um the return. But still, it's it's better than nothing, right? So, but yeah, we just out of the game around, yeah, I think it was around, yeah, 8:30 a.m. Sorry about that. Yeah, 8:30 a.m. Then yeah, that was the trade behind, the trade idea behind it. Yeah, so yeah, so for those people who try to enter it here, could have just made like a 13x, and if you were like entered from here, could have got a 4.1x, and there was also here a potential opportunity. Those people also might have earned like 9x risk reward. Then yeah, whoever tried to enter from here, trust me, all those people are gamblers. Now the market is trying to take those like late entries. Yeah, people who bought it from here, like using a market order, might have earned some money and they might have closed it here, which is good, well and good. But based on what I see here, is there is the liquidity is resting here in this 65 to 35. So there's a high chance that the market can reverse from here, then take that liquidity, then okay, I can just move it like this. So maybe the market can either do like this, right? Right? Or the market can do like this, right? There's a possibility. And yeah, that these are the two possibilities. Is why? Because if there are a lot of um, traders might have like panicking, or might have FOMO traders might have entered already here. So there's a bunch of liquidity is here. So probably the market wants to grab all these stop losses. So a patient trader would never jump immediately into the market. What normally you do is you'll wait for that right moment and opportunity. And if we see a confirmation here, somewhere here, yeah, I'll just put it here. Yeah. If you see a confirmation somewhere here, then you should, we can just take an entry. That's what I'm planning to do. Um, but as I mentioned, there are multiple things that you can try it. For an example, so I'll just move this one a little bit here. Oh my god, my bad. Okay, I'll just delete this one. Okay, so now you might have asked the question like, okay, why should I, since the market, you're saying the market might have, not might have, the market wants to do a pullback, then reverse, then why should I take a trade, something like this, right? By entering it here, by stop loss setting here, and at least till here, right? Or I'll just tightening the stop loss here. You might have thinking like, right? I could have, yeah, I can even take something similar to that, right? But the question is, you have to wait for that right confirmation. Like, where is that pending order? So still, the big players can manipulate you from here, and they can just put you out of the game. And if you already know that the market is going to reverse from here, rather than you just take a risk of 5 point, like just like a 5x risk reward, if I'm in your position, I won't take this trade. If I got, like, for an example, as I mentioned, if the second option was planning to do like this, then reverse, right? Then technically you can make like 8x risk reward. So that's the way that you should think, like the pullback trade, but that's kind of like a risky trade, um, because there's a high chance that you will get stopped out. Of course, I know there are liquidities here. Probably it can even come and take these liquidities. So my prediction is the market is going to take this liquidity, right? Then it can it can reverse. So if you do a trade something like this, right? This is also quite possible because it's giving you 4.5x risk reward, right? And that's also a possibility. But sometimes what happens that if the market makers decided to move the market like immediately, and when they see a lot of pending orders here, as I mentioned, there are a lot of late entries here, right? A lot of liquidities here, so they want to collect it in a single shot, or maybe they'll just do a kind of like a slow snake move and take the liquidity and just go to maybe something like this, right? Something like this, slowly take it, right? Then it creates the liquidity here. These are the, I would say, the trend line liquidity. A lot of people might have shorted. And next day morning, what they're going to do is, since they want to go here, they'll just take a big move here so that whoever ended here for around 10 hours of time, they'll the market makers will take it in one single shot and back that profit. Like whoever here in this position think like, okay, the market is now reversing because it took the weak liquidity, but since the market wants to go and grab some of the pending, see there are some pending liquidities here. So if they decided to move up, then they'll move. But so as a trader, your role is to make sure that you grab as much as possible movement. Like don't be greedy. As I mentioned, I could have just did like this, right? And that's 23x. But there is no guarantee that they would like pump it from here. Of course they wanted to grab that liquidity, then reverse. As I mentioned yesterday, we don't know when they will take it, but New York session is a session where most of the time the higher liquidity form. So that's why it pumped it, and it was so fast. So if this happened in Friday, then Saturday will be like this, slowly, and Sunday then they'll take this liquidity, and Monday boom. So that's how the market worked, but it's not that easy to identify the manipulation. But I'm just giving as a basic idea so that you'll think differently. You'll think as a pro trader, or like a pro firm trader, or like the institutional trader who try to see the market. Like if I was a retail trader, where will I put the stop losses, right? So here, as I mentioned, now see we are thinking like, now you're thinking like, okay, why don't I just, since you're saying like it should go here, why don't I take this trade? So even if I don't put this order here, still if you think like this, then the market makers can easily think like this, and that would actually take you out of the game, in just like one single week. So that's something I see the market could catch till here. So my prediction is probably, yeah, there is, if you see like a 30 minutes, like a 1 hour, I'll just do like an hour. Yeah, it looks like, yeah, let me just, I do have another, like a tool here would give me a little bit more view on the charts. So I see there is a liquidity is here. It's like a small hidden one. So probably they'll try to take that, right? Then yeah, I'll just mark it as blue for an hour. Yeah. So if you consider it here, so when you set stop losses, you should think from not as a retail trader, you should think from prop trader. So if I was in your position and if I'm not greedy and I don't mind to wait, what I'll do is instead of, yeah, and I believe this was the reason why I just marked it here is because of, yeah, that's the, yeah, kind of like a 4 hours, but yeah, I'll just consider 1 hour um as a closest liquidity. Yeah, it can even come here, but it's not that, yeah, if they decided to move something like this, they can, but it's like an easily predictable thing, right? So I don't think so that it's easy to predict the market in that way. And it's not that easy, like you just take a trade, then you took it. Yeah, whoever took the trade from here with the proper analysis of, see, the liquidity hunt happened, then you wait for another swing, then the prices keep rejecting from here. So it's like a good sign that the market wants to go down. But did you get a confirmation from here? Like when you take a trade, did you get a confirmation from here that you can take a trade? Or did you, what is the reason behind like taking a trade from here? And why did you set the take profit till here or till wherever you plan to set? So you should have that question answered every time when you just plan something in, like when you say that, hey, I planned a trade. Okay, so why? So that's something what um I believe, um yeah, it looks like the closest one is here. The market can still come here. So if I'm in your position, I would take a trade like these, probably, right? Yeah. But yeah, this is one of the riskiest. Uh, see, imagine now you see you're confused, right? You can see a lot of trap zones here. So that's where when you do a reversal trade, the win rate is always lower. Um, then if you have a win rate, then I'm sure that you are a really good trader in terms of psychology and technical analysis. But based on what I see is, um, there's a bunch of um, orders are already placed here. So the movement I'm expecting is going to be a little bit fast. So yeah, even if you come to the lower time frame, see what I'm saying? Like, yeah, yeah, it's like, yeah, it can even take, this is for sure. This liquidity is for sure. I don't know why I marked this. Yeah, it's the beginning of the imbalance. So probably I would say, yeah, let me just try to put it as 5 minutes here. Okay, yeah, it took the liquidity, and I still see, yeah, No, but still I'm not convinced yet to take a trade from here. Well, this one is for sure, but not yet convinced to take this trade from here because people who doesn't even know the order flow and how the system works, there's always um, there's always a reason behind every move. So, like, if you're a person who buy from here, this is a buy order, right? And a lot of people might have entered here, then set sell orders here. So that means it's like, of course, you buy it, then you set a stop loss of in case if the price goes out of my predicted area, then uh, close the trade. So that's considered as a sell order, right? So, like when there is a sell orders is triggering, the market would just like move like this, like a boom boom movement. So if you are those person like people who set the trade here, right? There's a chance that it can take you out in that like that one single week can 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 do that job of vanishing your money because it all looks like it's all institutional movement, so they decide where to put this week like this. If who knows if the market is like this. And there are, I think in the previous week also I found these kind of like a movement. So just that one week would stop most of the traders who set the stop losses here. So whoever who set like a 1x, 3x, 2x kind of trade. So yeah, you have to be a little bit careful when you when you plan these kind of like a reversal trade. I do have a strategy and some tools to analyze if it's the right moment to take the trade because I use um, a liquidity algorithm. I do have like my own liquidity algorithm on what basis these movements are happening. So if everything matches with my ideology and my tool, then I would take a risk. See, I'm taking a risk and it's like I'm not setting a stop loss. I'm taking a risk from out of 100 percentage, I'm taking maybe 80% probability. So there is a chance that it's going to be a win for me. And in case if that probability was wrong, like out of 100, if it's 80 percentage is win, then 20 percentage is loss. And I do have a plan of how much would be my loss. So, and see, I have set um, a risk guard of my daily loss limit is 3%. So if my overall capital had a loss of 3% for the day, I'm done. I'll close my laptop. So, but at the same time, I want almost three times of my capital, like risk limit. That's you can set it the way that you want. So you can even set like 10 percentage, like if how much money that you would like to grow in a day, and don't be greedy by just putting 20, 30 percentage. So reality, like if when you just ask me in reality, the banks in most of the countries do an like a FD, they would give 7 to 8% a return annually. Or if you do an S&P 500 average growth year over year or like quarterly or 6 months, that would eventually give, depends on your trading skills or what you call the swing trading or like kind of like a maybe like a whole trader kind of thing would eventually give you like 8.5 to 9. Now, you have to understand that the amount that you're setting it here is daily profit target. So consider that every day you make 8%, that would give you 240 percentage of your risk. I mean, 240 percentage of your money. And that's what you see here in the performance dashboard. we don't value the trading return. Of course, we want to see it, but our question is like, from the day you put that initial money, how much that money grown? Like, so as you can see here, from that day, I think I forgot to post that trade here. So it's technic. I think I'll post it here. I think it was the same. Yeah, 13. I risked 2%, but I forgot to log it. And that was, I believe, I started at Asia. Then that was, what was that? That was um what was that? What should I call that trade? I would call it as, yeah, same as liquidity sweep, right? I'll just name it as that one. And that trade happened, it was yesterday. And see, it's still, you can log the trade, but that's the flow was a little bit easier when you do it at the same time, or you can even do it at, but this, I think I had some work, that's why I just closed the laptop. And the trade was on, no, the trade was on today's 14, and the trade was on 13th, right? So yeah, I think this, I got an opportunity to show how I log this trade. So even if you just did that today, like this was the trade, then you just click on log, then all these information will automatically populate here. So your role is just to make sure that the date, then provide some information in terms of what session that you took that trade, and just give a name for your setup, so that next time it gives you like an idea what is the win rate and how much money you lose and earn from that trade, right? And once you hit it, that means uh, it's saved. So there is no save option here. It won't auto save here. So I would highly suggest, once you finish the trade, just do like this, save that trade. Then it saves here with a draft mode. So your role is to provide the outcome of that trade. So since that was a win and it got hit, yeah, it got hit the full TP, because I I set the target as here. I think it was 13, but this one was the like we changed that. Yeah. Now, of course, I followed my rule. And my feeling was mindset. I have kind of like a FOMO. So whoever watched that live yesterday was not even having a FOMO. I was not even having a revenge trade. I was not scared. Of course, I was not greedy. If I was greedy, I could have said this. Stop loss. Sorry, the take profit here. Then the market could reverse here, and then I would have closed it here. So that's the greedy one. And panicking is like when I see this kind of a move, then see a sudden candles here, then I think, oh my god, this is going to reverse, so let me just close the trade, because I got 9 here, so still I'm saving 6. So but see, there's a possibility of 13, but you closed at 6, so that's called the panicking. So since I didn't have any of these issues, I don't want to, sorry, since I didn't have any of these issue, I don't want to choose anything. But if you had any of this feeling, provide your honest feedback to the system, so that it gives you a customized report for you, and give you some sort of uh, dynamic TP plan and capital protection plan to save your money based on your habit in terms of your mindset, right? So in this case, it was a full TP hit and done. So now you see, I took 2 trades from these live. Both the trades were profit, and I'm not lying. It was on record. You can come and check the previous live. So technically, I made how much? You don't want to come here and do a manual math of how much I earned here. So since coming back to, let's see if what happening. Okay, everything looks fine. Yeah, so I come here in the performance dashboard. Now, this is the most important thing. So if you come here, what happened? on which month is this? This is July. Oh, it's looked like, yeah, I think yeah, I think I missed a couple of trades. So this was the previous month. I took a trade of one trade. Yeah, this is only considering the live trades which we are taking. So we are giving the live, honest um, feedback here. If it was a loss, then I would say this is a loss. Okay. Now, based on what I see here, see, I had two trades based on the liquidity sweep setup, which is giving me 100% win rate. So that means I trust this setup. Normally, Asia won't give me 100% win rate, but I don't know. It's Bitcoin. I trade mainly on New York AM and PM session, and sometimes Asia and sometimes London. But Asia never gave me this kind of Asia. I always avoid Asia because the reason why I come for the live in this time is because um, it has this session has less liquidity, so we'll have more session to learn about strategies and market. That's why I choose Asia. But in between, if I got a better trade, I would immediately punch it and grab that profit. Yeah, I think those two trades was long. So there's nothing quite you have to worry about long and short. But if you're like like a first time trader, you always have confusion between long and short because sometimes your analysis might be, I think for an example, if you are trading on a bullish trend market, you would have never take a trade of a reversal or like a short trade. And suddenly when so for an example, I can show you that as an example. Let's say the gold. So for those people who trade gold for quite long time, like I would say maybe, yeah, see this these like see these traders who were live on 2025 to uh, 2026, they would never think about taking a short trade because gold was doing this like a typical stock trade, right? So you would never think about doing a short. Yeah, from here after a long time, that the short was happened in December, starting from see November, the whole month till December 29th. So almost 2 months you might have. And see, who knows, maybe you missed this trade on December 29th. Then again you started. There was no way that it was giving a bearish mode. So these kind of traders will have a psychology in terms of doing long with short. So that's why I just provided that information there so that if you have a confusion between long and short and where is that areas of improvement that you need, then this data would show you because you already provided that information at the time of calculating your position size, right? So you don't want to do manually anything. It's all automatically populated here and how much money that you generated. Since we take both the trades on a bullish market, that's why it was 395. Then of course we did only one pair so far. Of course we'll be doing multiple pairs in the future, depends on the liquidity, but I see a lot of setup in BTC. I see multiple setups and it has a lot of beautiful liquidity movements. So that's why we can back it. So technically I made 395. Now, since you're like a first time you're coming to this page and you take multiple trades and after a month or after a couple of weeks and you wanted to know how much money that it grown, as I mentioned, like the conversation started because of that risk guard profile, right? So that was 8% daily. So imagine who is going to give you a 35% return in 2 months. So you consider these two trades, one trade in July and one trade in June. So you took technically two trades by risking $1,000. Sorry, by started with $1,000 capital by risking. Yep, sure that you might have your average risk reward and average return was 9.3. I'll come to my, there is a different section called consistency there. It shows my, I don't want to confuse you by showing that value there, but I would suggest, yeah, the average risk reward used is 2%. So when you come here and see that I didn't even take like 9 or 10% of my risk, my $1,000 capital. I risked only 2%, and I even took trade. You see, the first trade I punched it on 25th. Then I came live on yesterday. So technically, just like two trades. See how much my money grew. Like it grown by 35, almost 36%. And do you really think that a bank or any financial planning or planners would give you 35% growth in 2 months by just looking at your computer for 2 days, then took that trade and received 36% risk? I mean, 36% of account growth, right? And your trading return was, of course, it's again three. It's calculating is because of it's at 1,100, but your net profit was 395 from the trade, and you took two trades, and our fees to the exchange was only $13, but we made 9.3 risk reward. And when you see this data, so since the graph is only showing up is because of we just took only one trade. And sometimes when you try to take some random trades and emotional trades, and you can come here and look at this chart and it'll look like this. And suddenly, if you put a 10% risk on your capital, then you'll see the graph is like dropping like drastically. And that would give you like a quick input of, okay, I am here to survive in this market, not to, sorry, not to grab that entire money of retail traders and big players in just one day and I'm just closing my trading journey. No, you're here in this market like the day till you have the breath, right? See if you have enough capacity to focus and use the laptop, and if your health is good, then you have the whole year, your whole life to do the trade and grow your this $1,100. So consider this as a growth. Like I'm not saying like every time we look for 9.3% risk reward. Even if you, okay, I'll just show you that. um okay, before I just show that, I just quickly show, okay, this is that growth thing. Then it shows your beautiful calendar in terms of how your month is doing, how your week is doing. So that would show here, and like it shows some individual day wise data. If you take any money from your exchange to your personal wallet, then you can even record that one under the transaction. So no need to connect any of your exchanges with BiasLogic. It's all manual, but I would suggest to take a withdrawal every week, like depending on how much money that you want to draw down, maybe a 10% or a 6% every time. Put it in your safe wallet. Consider that as your savings, and put that money and invest in somewhere on ETFs or some other trading um, platforms, not on crypto, because your role is here to make money as soon as possible with like higher growth rate. Then invest that money somewhere. You can even start a business, or you can even invest that money on building a skill that would eventually make you money, right? Because you're not here to invest, because BiasLogic is not an investment platform. This is, as I mentioned, this is a trading analysis platform where we analyze the trade, why we take that trade, and in a possible way, it will help you to make sure that it will teach you something, and it'll control your emotion, and it'll give you a clear picture of the root cause analysis. Like if you have a problem, then you don't know where exactly your problem is, then the dashboard can show you a problem, and the consistency page can show you where exactly your problem. But I don't want to deep dive into these things in one single live. So we have upcoming live, so we have a lot of tools here, and we can explain a little bit more about that one. So considering the fact that So the reason why I've just started showing you this because this is important. Like, so this one is not important. Win rate doesn't matter. At the end of the day, this is important. Like how this money, like $1,100 grown to 14 or $1,500 in 2 months, and how much increase, right? So you just put that money there, like 35% growth in just from taking 2 trades, which is really good, right? Yeah, so that's what the BiasLogic performance dashboard looks like. So coming back to our session here. So see, remember people who try to take these trades, uh, yeah, it looks like a trapping is on currently a trapping is here, but I feel like I have a sorry positive feeling that most probably the reversal is going to happen from here, but still I'm not 100% satisfied to take that trade here, but I would prefer to either, like, yeah, I would highly prefer to take this from here, and it gives me 7 risk reward. Or you can even go back to the lower time frame, right? Then look for that right, because the one thing you have to understand that when you're on a 15 minutes time frame, just that one single candle is 15 minutes, right? And I'll just mark that 15 minutes candle. This is that 15-minute candle. So if I come here at 3 minutes, see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So 10 candles is that probably that just one thing. And when you do that 1 minute, that is 15 candle is what that candle speaks, right? So sorry, if that one, oh, I think it's a little bit tricky to identify that just one single candle looks like this, right? So 3, yeah, that one is 3. That means 3 minutes, 5 candle. 1, 2, 3, 4, 5, right? And if that 1 minute, then that's 15 candles. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. So this is that this is that candle, like what you see in 15 minutes. That just one single candle. So you see how noisy is that if you are on that 1 minute time frame, you cannot even make a judgment or a decision based on these candle. It says like, see, it has got a big wick, buyers and control, then sellers push the price down, right? So if you're on a 1 minute, what you're learning is, hey, buyers, like buyers, sellers, then again buyers, sellers, now buyers. Okay, you understood. Okay, let me just take that trade because I see it didn't close below this low. That means still buyers are in control. I'm gonna take that trade. But you have to look at that 15 minutes overall. See, the 15 minutes is saying like the higher time liquidity is here, resting somewhere here, right? So you shouldn't be blindly going to a 1 minute time frame and take that trade. No, that's not a right trading behavior. So you should be very careful when you take a trade uh, on yeah, should be very careful when you take a trade on live. Yeah, that's something what I would look for. Yeah. So yeah, yeah, I wanted to take that. I expected the price would come here, then move like a beautiful move here. But you see, as I mentioned, this is the Asia zone. There'll be less volatility and less liquidity because a lot of traders would join in in the London session. That London session would maybe take that trade, then take all these individual sellers who try to short, just do a 1 week or one big candle, then and do the task based on their way. But yeah, that's the overall analysis what I'm seeing for today. But yeah, you can closely monitor the market and see where the liquidity is resting, then should be fine. Yeah. But yeah, you see, we'll just lower the time frame. Sorry, we'll just go with the high time frame. Yeah, it looks like it has got a liquidity here. That's the high time frame liquidity. And if you lower it, that would be something. You see, that's the 30 minutes kind of like an order block. And if you see that it's respecting, then we could have take that trade, but it doesn't look like it respected that 30 minutes order block. So not not a great fan of taking a risk from here. See, like when you look at this candle, see, it's the majority or the players are in the market is sellers, right? And only a I would say an institution can enter right now, then out, like, get out all these people from the market. A retail trader has a limitation to push the price because we don't have that much money. Like, see, in our case, it's only $1,000, but they might have $1 million, $1 billion. So if they decided to push the market from here, right, then they would push it. And as I always say, that the backtesting gurus don't consider that, hey, this was got like an hour order block and that's why it's going up. No, it's not because of that. It's because of the big player decided to move that market. So then you ask that, okay, then how do we enter the trade? Then see, why we predicted the market is going to pump till here or pump till here yesterday, because we identify where is the liquidity is resting, right? And now you got confirmation. Now the next thing is that where do you enter it? See, as I mentioned, I got an indication from here. I think I shared that even with yesterday's live. People might have entered from here. See, there are things in the market people will teach called Fibonacci. Like, even if you take that Fibonacci retracement, right? 50% was here, 0.62% was here. So what is teaching in the market is, hey, when you see the bias is up, try to plan for a trade on Fibonacci 0.62, because that's the most closest psychological point, right? Then you take that 0.62 here. Then what happens? You will plan everything. Okay, I'll tell you a typical human psychology here. Now, since you identify the liquidities here, right? Not here, to be frank. It's like here. That's what people see if you think from here, right? So what a typical person do is, what they see is, okay, there is an order block, right? I'll take a trade like this, right? Then if I was in your position in back around 5 years before, what I normally do is, there are something thought in the market like, hey, don't take more than 3% risk reward, right? Then I'll look for, even if this was my target, right? Then what I'll do is, hey, this is 9x. What if this would do a wick here? I need only 3x. Or maximum, I'll just do for 4x, right? I'll just do 4x. This is what people teach in the market like, hey, you just need that much, see, liquidity is here, or liquidity is here. You Why you want to go with here liquidity? There are liquidities here. Just grab it. Then what will happen is, this was your hope, right? I won't say you're greedy. This is like your realistic hope, and you're not targeting somewhere here and all, right? You're just targeting a realistic areas where the price would reach and grab it. Then people will enter it. You will see a green sign on your exchange because your trade starts here. It never touch your stop loss, right? Then it'll move like this. Then what happens here? See the market, the trap is somewhere here, right? So your risk reward reduced from 1 to 1.38. But do you think that you will close it here? Never, because your expectation was still here, right? Then the next thing what is happening is, hey, you are like, it's giving the rejection wick, and people who are confident, oh, I'm pretty confident the market is going to take from here, like in this week, then it's going to go up, right? So that's the one type of sellers. They'll say that I'm okay with 1x, I'll take it. The another group of traders who like, hey, I'll close it because I expected 4x, now it's reversing, it didn't close somewhere here, then that's why I'm just taking it. So technically what happened, like, your 4x became like 1x. So the other group of traders, what they will do is, they'll drag it to the next possible, let's say the imbalance, right? And you see what happened. It even took that wick and out of the game. You're out of the game. So what happened here is, you're you're not greedy. Your strategy was good. Your planning was good, but you got trapped, right? So that's exactly what happened. So that's one of the reason why I'll say that don't trust on this Fibonacci thing. So based on the Fibonacci, it should go from here, and then why it came here. So it's not even close to 0.62 based on the human psychology kind of thing, right? See, whatever you see in the market, people are teaching, there can be two scenarios and two reasons. One is, the big player, the market players are actually introducing these in the market. Then these online gurus will try to test it, do the back testing, and sometimes the 0.62 work, and it would give them the results. Then market makers purposefully do that so that, like, you sell course, then people will enroll that course, then you make money, they make money, and they can easily trap. Look at this, how much liquidity is they were able to generate. Those were like 18 hours of, I would say, not 18 hours, like whoever, I would say like 11 hours of liquidity is just like grabbed with multiple big wick. But a good trader would wait for the right confirmation here. Don't trust on this Fibonacci kind of thing. Or they'll try to enter the trade here with the proper stop loss, and they'll accept the stop loss. So you're not dragging it down by just adjusting your risk reward. If you're planning for 4x, it's 4x. If it's not hit, forget about 1x. You just lost one out of your next four trades. So you still have three chances of winning if you're on a right position. See, you just try to enter it from here. That also trapped you, right? And that's the two gone. Now that this one, you enter it from here. Now what happens? It gave you maybe 10x. So that means it covered the rest of the three from here and give you an additional 7, right? So next time, the next 7 trades, if you are lows, you're still profitable, right? So that's how you should think and behave in terms of uh, uh, the market, and how the market would get you that, like, that proper risk reward. But yeah, so here in BiasLogic, we don't we don't believe in that traditional techniques. So it's here is a pure psychology and the price action, and the main thing is the liquidity. Where we see the liquidity, the market moves between liquidity. If they find it here, then they look for this, then from there where is the next liquidity, and it will move there. But the big players, how they make money is like they manipulate the market. So technically the market should go like this normally, like the way that the gold move, while I was showing the gold move, and suddenly the big players enter the market and do a kind of like a big movement. So the algorithm doesn't have a choice other than come down, then slowly. Imagine if the big players out of the game, then you'll see the chart is going like this, unless until if somebody's taking high leverage and buying 200 bitcoins, then the price might move like this. But see, my question is, as I mentioned, like I'm talking about only 30x, right? You're not even thinking about um like this. So I'm giving as an example of a $500 risk reward, right? Like I'm talking about, I can I can even try putting that same trade, which is I'm not talking about 26, I'm talking about the 13x. And with the $500 risk, I need $296,000 in order to open that position. I need $296,000, and I make 6,542. I'm not talking about the whole day trade. Okay, it might be a 3 to 4 hours or even like a 2 hours of trade, just for like four Bitcoin. Right now, you multiply that with 2 million, right? Like you put a zero here. So 296,000 plus an additional zero is 2.96 million. So if somebody open a position of 2.96 million, that means they will be risking 5,000, right? That 5,000, you put a zero here, they make $65,000. And do you really think that there is 5,000? They they don't even set stop losses, so they can even risk $50,000, right? And you put an additional two zeros here. That means $650,000 in just that one trade between few hours. Forget about 50,000. You just put only 5,000 risk, right? That risk reward would actually give you $65,000, right? And if you're a big player, you can risk $5,000 by opening a position of 2.9 million. You can make 65,000. So this is, I'm just talking about like a normal individual retail trader who has a lot of money. But think about now like a big player who's ready to put no stop loss and put $2.9 billion or $2.9 million. They will make $650,000 in one single trade. And yeah, they will have loss of maybe $7,300, right? Or $73,000 for a $650,000. It's fine, like 13%, like 13 times of that money that they're risking. So that's where you should think, like, not like an individual user is like moving the market. It's the big players are moving the market. Yep, I'll close this trade. I know I'm just still looking for some serious viewers who can ask some questions so that I can answer online, but still I'm looking for that first person who was going to ask me that tough question. Then I'll drink some water, then I'll say that, hey, I'll get back to you later, maybe in the next trade or so the next live session, and I'll give you that answer. I'm just looking for that kind of a student. But yeah, I'll see you all on tomorrow. Whoever is watching this post live, you can come and you can just look for the next videos in the live folder and YouTube. Then we'll see the prediction, how the market moved. So whether it came here and took the liquidity, or it moved from here, then grab it here, or it took like this, then did like this. Yep, this is the prediction, and we'll see. I'll also post it here as the same as um, yeah, for those people who are looking to enroll into these the dashboard. It's not just like, don't enroll it just for the sake of getting buyers and like trade entries. It's a pure like a beautiful tool to develop your skills in, like, your develop your trading skills. And I'm going to update here, so you'll always see a timestamp here so that you won't get confused which screenshot is this. Yep. And yep, that's, I'll be updating these yeah, I'll just updating these coins, and maybe in the future I'll be adding more coins here, but I don't have a lot of time to analyze and put all these here. So that's why I just thought of, like, grow your skills and understand the basic bias, because BTC is the core currency, sorry, the core pair who follow the rest of the pairs like Ethereum, Sol, and BNB, and all those other pairs. So if you know the bias of BTC, then you can easily predict the market, where the market wants to go next. So yeah, I'll be closing the session now here. So any questions or concerns, you can always join to the free weekly bias, and there's a community there. You can post your questions and share your, like, success stories, or your failure, or see, think in mind, like, yeah, failure is not a bad thing. It's a part of the game. Like, once you start learning, investing time on learning, then eventually things will become like more easy for you. And trust me, trading is hard, but it's not hard to learn. And once you learn, then you feel like, oh, this was so simple. Why I was just like, people are saying trading is so hard. Yeah, it's kind of hard, but yeah, if you know some some things, like, for an example, like the one that I pointed at here, like the risk, um, like your journaling, your consistency, your trading psychology, everything it's fine for you, then yeah, you're good to become like a profitable trader. And people who are looking for resources, we keep updating some blogs here, so people who doesn't even want to watch a 1 hour live and but still want to learn something, yeah, you can even read some of the blogs, and I'll be keep updating these blogs here. So yeah, that's all about the day, and I'll see you all tomorrow. Have a good day, good evening, good night.